Welcome to The Explainer. Today, we're breaking down a fast-moving intraday market report. So, the main vibe here is risk on, but cautious. It's an interesting mix of optimism and hesitation.
So why the caution? Well, a recent tech wobble and government shutdown talks are making traders a bit nervous.
But here's the twist. One key indicator is actually flashing green for a lot of assets. That's the 200 EMA. Basically, if the price is trading above this line, it suggests a long-term uptrend.
So where are we seeing this bullish signal? Turns out it starts with the big U.S. stock indices.
Yep, all three major indices are a buy. The big reason? They're all trading above that 200 EMA line.
The NASDAQ is really leading the pack. Strong AI performance and good earnings are attracting buyers again.
And the S&P 500? It's showing just how healthy the broader market is, with solid earnings pretty much everywhere.
Meanwhile, the Dow is getting a boost from investors rotating into cyclical stocks, a good economic sign.
Okay, so that's stocks, but things get a whole lot more complicated when we look at commodities.
And wow, what a split. Gold is a clear buy, but oil? That's a sell. Two totally different stories.
Gold is shining right now. A weaker dollar and all this political uncertainty are driving demand for it.
It's trading around $4,005 an ounce, and the report thinks it could go even higher. Oil, on the other hand, is under pressure. Why? Too much supply, thanks to a big inventory build. So any rally towards $60.30, the report says that's likely a selling opportunity. All right, so we've got all this conflicting data. What's the big picture? Let's put it all together. Here's the takeaway. Stocks look solid. Gold is your classic safe haven play, but oil, it's looking weak.
And you got to remember, this is just a quick snapshot. It's an intraday report, so things can change fast.
Which leaves us with one big question. With tech strong, but oil weak, what's the economy really trying to tell us?